Well, here we are in the last day in Cape Cod, last day and night in Cape Cod. And I just have to tell you, if you haven't visited these coastal cities, these East Coast cities, and you've seen pictures of these idyllic, white clappered, beautiful homes on gorgeous lawns, looking like something from an MGM backlot, you know what? That's exactly what it looks like here. It's shocking. But then for those of you who are live in the neighborhood. Maybe you always knew that. For me, first time in New England, I was shocked to see mile after mile. I mean, literally, we drove for 2 or 3 hours seeing nothing but unbelievably Disney-esque looking streets. Anyway, let's get into what's going on with Tesla today. We have got Elon wanting everyone to calm down. Now, he didn't say that. I'm just saying that's what it sounds like. He wants people to calm down about the supercharger network issue. He's posted earlier this week that there will be an emphasis going forward on not so much, the emphasis would change, not so much from opening up new supercharger stations, all around, but rather to improving the quality and also the number of units in existing stations. I thought that was a fine thing to do, and people have been popping up all over X saying, well, we do still need one unit right here, and it would be great if you could put a supercharger station in here and there. And I don't think I don't think the company has stopped doing any of that. They've got the data. They know exactly where there is issues with being able to, get to a supercharger in a reasonable amount of time, and they also have the data on which of the existing units need more actual chargers at those locations. I don't think this is going to be an issue, but he added to his statement of last week by saying the company will spend over $500 million on new chargers and charging stations this year in 2024, not counting the continuing overhead expenses for those new stations as well as the old stations. So I don't think there's anything to worry about. This would be triple to 4 times what anybody else is going to spend on charging this year. Moreover, of course, Tesla is getting probably 4 to 5 times the amount of charging capability for every dollar they spend. Yeah, literally. Literally, we've seen the numbers where Tesla is charging $20,000 or $30,000 to install a single unit, and other people are charging $100,000 for one charging station, unit, not the whole station, just for the unit. So yeah, Tesla, of course, are putting in these stations at cost. So I'm going to guess that maybe it's only costing them $15,000 or $20,000 per actual charger. So you can put a lot of those in for $500+ million. Meanwhile, Bloomberg did a story saying that BP is interested in buying some Tesla supercharger stations. But what's really going on there? Are they really looking to buy existing stations from Tesla? Well, that wasn't clear in the Bloomberg article. And so now there's been a lot of conversation back and forth about whether Tesla has any interest in selling stations. Let's face it, almost everybody's interested in selling an asset if somebody's got the right price. I just don't think that Elon will be that interested in selling this network because it's kind of part of the ecosystem. In the meantime, Troy Teslike says he thinks that maybe people are misinterpreting that article. In his opinion, he thinks that BP is trying to buy some of the leases and some of the lots that Tesla is no longer going to be building out, if in fact that's even true. I didn't see anything anywhere that would suggest that there are existing leases or existing properties that Tesla has decided to abandon. But maybe that's what it means. Who knows what it means? But right now, at least, the stock in the morning seemed to be thinking, oh, okay, no problem. They're going to spend all this money. But then later on, the stock started down again. I think it's the 5th day in a row. AJ has this to say. By the way, you want to follow him. He's Alojoh. So it's not anything like AJ. I mean, there's an A and a J in there, but you know what I'm talking about. Anyway, supercharger build out continues to at a strong pace. Elon just confirmed by telling everybody that Tesla will be spending $500 million. As I said, he says to put that $500 million plus, by the way, it says plus, EVgo and ChargePoint, two of the biggest non-Tesla charging network operators, spent in 2023 $159 million and $19 million in CapEx. So Tesla's been adding an average of over 3 sites daily, 7 days a week, and added quarterly last quarter nearly 3,000 connectors. Whole Mars has put out a video comparing the Mercedes driver assist program compared to full self-driving. Consumer Reports was talking about how great the Mercedes was, much better than the FSD. Well, the results were not great for when Mars and his dad, I think it was, did this video. And others have now also taken a look and have made some comparisons, and it doesn't look so great. So Elon responded to that, and he said, look, Tesla is a half a decade ahead or more, a half a decade or more ahead on full self-driving. All right, this is coming in from Ord Pretty Flacco. The handle there is SMD Capital 100, if you want to follow this person. And it said that Carvana has found that several South and Midwest states have reached the 4% EV sales threshold. Never heard of a 4% EV sales threshold. I thought it was a 5% EV threshold, but whatever. Carvana says that several of these red states are now passing 4%. That could be an early potential sign of Elon's plan to appeal to the other half of America. Well, I don't think that Elon sat down one day and goes, you know what? I've got the libs in my pocket now. I got the liberals. I got all the Democrats. They're buying my cars like crazy. Now let's go and start talking to those conservatives and those Republicans. I think, as I've said many times on this channel, that effect is happening. By the way, my face is getting distorted. It's driving me crazy. I don't know what it's doing for you. Maybe it's better that we're having this fun, the fun mirrors in the fun house, because it gives you something to look at. Anyway, but all I'm saying is, I don't think there's a plan on Elon's part. I think that he has, as he said, he didn't move. The Democrats moved. He is now more to the right than he was before. And he's even commented today that some of his friends have been changing their mind about how they're going to vote. People who said they would never vote for the ex-President Trump are now saying they will vote for Trump. And he said that was his experience as well. Doesn't say that he's going to go that direction, but that is a comment he made. All right, one might ask, after all that I just reviewed, why is Tesla stock going down again today? Well, bond yields are up. So all the Cathie Wood stocks are sharply down. The Mag 7 are down for the most part. I think Microsoft and NVIDIA are up slightly, but they're down from their highs today. So Gary Black thinks that the reason Tesla is down today is a continuation of downward expectations for short-term sales and earnings. That might be part of it. I'm not going to argue with Gary, except to say that would be unwise to base my current valuation of Tesla on what's going to happen in the next couple of quarters. And it might be a surprising result coming in the next couple of quarters as FSD rolls out complete. Just taking the nudge off is going to change that product entirely. Anyway, but we'll see what happens during the rest of the year. He thinks that might be part of it. It also could have something to do with the protest in Germany where 800 what appeared to be young men, maybe some women, rushing in their black uniforms with their faces covered, because they're mad about something. They're mad about capitalism in general. They're mad about what they believe to be a threat to the trees in the neighborhood, which is a tree factory. It is a commercial tree farm, which Tesla has replaced not with another tree farm. They've replaced it with native trees, native vegetation, which will be so much better for the anyway. I could go on and on. Anyway, but I don't know. That seems to have been put down by the local constabulary, so I'm not sure that's having anything to do with stock this morning. It might just be a bit of this and a bit of that, or it might be that there's technical reasons that Tesla is now building a new bottom where we can move up from that bottom as 12.4 and then 12.5 and then 12.6 come out and have revolutionary new capabilities, which will be, thoroughly reported by the folks on X, but maybe not the folks on TV. In any case, it's looking like another down day, but let's check out the general economy and some cracks that are appearing there. I reported on this in great detail last night. I'm going to run over some new stuff that we have today and do another kind of synopsis of where my mind is right now with regard to the economy in just a second. But this is Randy Kirk. Please hit the like button, the subscribe button, and the notify button. And the notify button is because, Brian White we have a video that he did with me a couple of days ago. Very exciting and interesting video coming up later today. Cern Basher will be on tomorrow and Sunday. We will have videos from him. And so you want to hit the notify button for that reason, if nothing else. And then we also have, of course, opportunities for you to invest in this channel. Just $3 a month or $5 a month, $10 a month would be amazing. So if you'd like to invest in this channel, it's I have expenses. I have 2 full-time people that are helping me out on this channel. And, it costs money. If you could help, that'd be great. All right, let's go on and talk about what MarketWatch is reporting this morning. This is the University of Michigan's gauge of consumer sentiment. Now, last week, there's another gauge. I'm going to forget what they call that one, but there's 2 different gauges of consumer sentiment. And the one we reported on last week had a dramatic fall in consumer sentiment. You may remember that if you follow the channel. Was really one of the reasons why I changed my mind about the upcoming recession, moving my needle up to a 30% chance in the third quarter. Well, this consumer sentiment number, this survey, if anything, confirms my change of position, might even cause me to move it closer to the 50-50 line. But for today, anyway, I'm staying at 30%. So it says that the consumer sentiment fell to 67.4 from 77.2 in the prior month, dropped 10 points in a single month. Economists polled by the Wall Street Journal had expected 76. They had expected it to drop just a little bit. But after that big drop in the other poll last week, why did they think it would only come down 1? Anyway, but it came down 10, which is even more than the other survey came down. And another key part of the report is the University of Michigan measure of inflation expectations. According to the report, Americans now expect inflation over the next year to go to 3.5%, where a month ago they thought it was 3.2. Expectations for inflation over the next 5 years rose to 3.1 from 3.0. Not a significant raise, but the other one from 3.2 to 3.5 in the short term, not a good sign. Federal Reserve economists believe that if consumers expect high inflation, it will be easier for firms to raise prices, and thus higher price pressure is more likely to occur. Yeah, maybe. I'm not so sure of that one. I think what is true is that if people are expecting inflation like that, they are going to start to put their hands in their pockets and stop spending. A gauge that measures what consumers think about the current state of the economy dropped to 68.8 from 79, over 10 points. A measurement expectations for the next 6 months dropped to 66.5 from 76, almost 10 points. Economists said that consumers had a lot of negative news to chew on over the past few weeks, including slower growth, higher inflation, and weaker job growth. But remember, these consumers, they're also going to the grocery store. They're going to the gas pump. They're making purchases. They're attempting to buy cars. They're attempting to buy refrigerators. They're attempting to buy a house. And then they're also looking at people being laid off or not at their job, or friends of theirs that are being laid off or not. So it's not just what they're reading in the news. It's also what they're feeling, what they're sensing. The University of Michigan said about this report, while consumers have been reserving judgments for the past few months, they now perceive negative developments on a number of dimensions. They express worries. This is what they expressed in the report, that inflation, unemployment, and interest rates may be all moving in an unfavorable direction in the year ahead. So that is not a good sign at all. The Business Insider, not my favorite magazine, but sometimes they have really good people that they're interviewing. And this is from David Rosenberg, who is a good guy. He says the U.S. might be sleepwalking into a recession, and signs of a downturn in key areas of the economy are starting to show. The Rosenberg research president pointed to a handful of warning signs that the slowdown is on the horizon. That's contrary to how most investors feel on Wall Street right now. We're constantly asked when we're planning to throw in the towel on our recession call, but perhaps it's time folks started asking when the rest of the street is going to pick their towels back up, he says. We've seen a downshift in the data flow that are starting to indicate the downturn in the economy may not be as far away as many believe. The job market has continually weakened over the past year, with the joblessness now ticking up to 3.9%. That means the job market is very close to triggering the SAM rule. We talked about that, I think it was yesterday or 2 days ago. And that flashes when the 3-month moving average of unemployment rate rises 0.5 above its 12-month low. Economic activity is also starting to slow. GDP came in softer than expected, as you may remember, a couple of weeks ago. Manufacturing activity contracted in April, the 17th contraction out of the last 18 months, and that's a strong sign the economy is weakening, as manufacturing has only contracted on 2 occasions since 1997, without the economy later slipping into recession. Popular recession models have also signaled a downturn maybe on the way. The 2 to 10, the 10-year compared to the 2-year Treasury yield curve, a notoriously accurate recession indicator, has signaled a coming downturn since July of 2022. We're almost up to 2 years that has been inverted. And that's a crazy. We report it here sometimes twice a day. I'll be reporting on it in a minute, talking about that inversion. And it's just crazy that it continues to be at this inversion. The full model, which estimates the probability of recession over the next 12 months, is showing that the U.S. still has a nearly 50% chance of tipping into a recession over the next year. But don't get complacent. The labor market is cracking. A slowdown in services activity is dragging on real-time growth, and forward-looking financial signals still point to a coming slowdown. Rosenberg has been warning of a coming recession for months, and fears of a downturn are rising as investors anticipate the Fed keeping interest rates higher for longer. Higher rates risk over-tightening the economy and sparking that recession. I'm saying that economists may end up taking the wrong message from this upcoming recession. I don't think it will be about interest rates, although they are contributing to inflation and thereby reducing the amount consumers have to spend. The real culprit here will be what I've said all along. The spending party has kept the economy alive, and that party is over. The Fed themselves say that the consumer has used up all the extra cash that they got from the COVID money. All right, so that's where I am right now. I'm still at 30% chance, but it is tipping towards a greater chance in my humble opinion. Okay, we've got the 10-year right now is up 5.5 basis points to 4.5. We've got the 2-year up also 5.6 basis points, and that's at 4.863, almost exactly where it's been, 35 basis points higher than the 10-year. But again, that is backwards of how it should be. We've got the US 2-month at 5.39, and that is also very much, it's 90 basis points, which is a little higher. The last few weeks has been more around the 75 level and seemed to be reducing, but now it's popping back up again on that one. Okay, let's go to oil. We have got oil this morning is down 60 cents. So now we're getting back to trading in this range around 76 to 80 on the Texas Intermediate. Brent is around 81 to 84, 85, something like that. Both of them now trading in a range for a couple of weeks, I think it's been since it had that big drop. Natural gas this morning is up almost a full percent. I'm sorry. Natural gas is down almost a full percent, down to $2.28. And that's still high for I haven't looked back to see how long it's been since it was at this number, but this is a recent high, but a little backing off right now, a little profit taking. We've got gold up 30 points to 2,369. So gold is taking another run. It's been running for a couple of days now. Obviously, the 2,400 is the number that we're looking. That's where it starts to get close to its all-time high again. And again, multiple reports talking about the central banks just buying like crazy. South Korean consumers have been added to the list of consumers. So we've got the Chinese consumers, the U.S. consumers, and now South Korean consumers buying lots and lots of gold. So we'll see what all that might mean long term. We have got the dollar steady today, not much movement. We have got the Bitcoin down 11.99, call that, well, just changed to 1,200 to 61,150. So that's still in that range. It's been pretty much from just under 60,000 to just over 80,000, and moving $1,000 a day doesn't seem to be a big deal for the for the stock. Okay, for the Bitcoins. Let's go ahead and look at the equities, starting with Tesla. Tesla's now down $4 at a 167.85. You've got the Dow Jones up 92.80, been up multiple days in a row. You got the Nasdaq down 29.61, and the S&P up a $1.61. You've got, as I mentioned, all of the rest of the Magnificent Seven, five counting Tesla are down. Microsoft is still up. NVIDIA up 890. You've got the Cathie Woods 100% down, mostly pretty significantly down today. So that would probably be the interest rates although they might also be impacted, as Tesla would be impacted if the economy is going to slow down. All right, let's look at percentages. We've got the Dow Jones down 0.23%, NASDAQ up 0.18%. Did I say that opposite? What is my problem? Anyway, Dow Jones up 0.23%, NASDAQ down 0.18%, S&P up 0.04%, and Tesla down 2.38%, with people like Apple down 1%, Google down 1%, Amazon over 1%. Yeah, and even the ones that are up, like Microsoft is up 0.35, NVIDIA up 0.97. So I would say that the Dow Jones is the outlier right now. The rest of the market seems to be pretty negative, pretty bad attitude after that consumer confidence report came out. All right, so remember, yesterday, you need to go back. Yes, you do. The Cern Basher effort, the conversation I had with Cern yesterday, tremendous stuff, excellent elements about Optimus and whatnot. I'll put the card right up here. And then later today, there will be a conversation with Brian White. Okay, that's what I got for you right now. As always, it's been great talking to you.